Hey everyone, welcome to my channel. My name is Venkatesh. In this particular video, I'm going to be showing all of you, the viewers, how to identify a particular item, how to pass it as a journal entry in the journal account or in the journal book. So I'll be showing you the format and how we are going to pass an entry. So I'm going to take the 5 important classifications of accounts, that is assets, liability, capital, expenses and revenue, and each of these items will have an example which we will be looking at. If you're wondering what this is, I'm using a drawing tablet to show how to solve the sum on a Microsoft whiteboard. So I have a drawing tablet with me and a drawing pen. So in order to avoid the smudging on the screen, I'm wearing this glove, no need to panic. So let's delve into the video and understand how do you identify a particular accounting item and how do you pass the first journal entry if you look at a particular, let us say, transaction. So several of the students who are in, let us say, 11th or 12th standard, or if you're studying first or second PU, or you're studying commerce at degree level, or if you're a teacher watching this video, this is really going to help you to understand how to simplify a concept known as journal entry. Journal entry is the first step in recording an accounting transaction. So we must have a lot of clarity to understand how to identify an item, respectively if it is an asset, if it is a liability, if it is a capital, if it is revenue or an expense to the business. So let's get into the video. Alright, as you can see, we have a whiteboard here and you can see me in the bottom right corner. If you want to look at me, I'm right here. So in this particular whiteboard, I have 5 important simple items that we'll just have a look at and how do we pass the journal entries for these respectively. And that way we'll try to understand how passing a journal entry becomes the first important crucial step in understanding bookkeeping. So in the business, they say that furniture has been purchased for rupees 25,000. Then there's a bank loan of rupees 10,000 which you have availed. Then there is additional capital being introduced into the business of rupees 10,000. Then there is electricity bill which is being paid from the business, which is rupees 5,000. And you have sales of rupees 30,000 coming into the business. Now, initially as a student, if you just look at this for the first time, you get really confused because when you look at these items, you do not know what these items are. You do not know if it is an asset, if it is an expense, if it is a revenue, if it is what it is, because you get really confused because there are so many items and so many numbers. You just have to understand what is coming into the business and what is going out of the business. So that is the first important key step that you have to remember in order to understand accounting. Accounting is all about logic, and the logic is generally money coming in, money going out. If you remember this, then all the transactions that you have to record in the book, that is in the books of accounts, is not going to be very difficult. It's going to be relatively simple. All right. So let's have a look. All right. We'll delve into how to identify these transactions as what it is and how do we pass an entry for this. Now, I'm just warning you, my handwriting might be a little weird, but if you're paying attention to my narration at the same time, you will definitely understand what I'm trying to say. All right. So you have furniture purchases of rupees 25,000. That's the first item. So let's directly try solving this. So you have furniture purchases in the business. So you have to understand that furniture is coming into the business. All right. So furniture of rupees 25,000 is coming into the business. It doesn't state how that furniture is coming into the business. So we will assume that you used cash to purchase the furniture. All right. So now what are we going to do? We're going to pass the transaction in the journal book as furniture account debit to cash account. All right. This is generally how you're going to pass the transaction. Now, you have to remember that furniture is an asset in the business, and so is cash. Both furniture and cash are assets in the business. So in this particular transaction, you're debiting and crediting asset at the same time. Now what you have to remember here is you're converting liquid asset, which is cash, into a fixed asset, which is furniture. That is why one form of an asset can always be converted into another form of an asset through purchases or sales. All right. So over here, you're purchasing furniture, which is a fixed asset in the business, and that is why you're debiting furniture. And you're crediting cash because you're paying the amount in cash to purchase the furniture. So what is the amount? It's already stated in the question, in this particular sample question here, of rupees 25,000. On the debit side, you will be writing it as rupees 25,000, which is the value of the asset in the business coming in, and you're going to credit cash rupees 25,000 because that is what is going out of the business. Now you have understood how to calculate furniture transaction or how to record the furniture transaction in the business. So this is how you record it, generally converting one asset to another. Furniture is coming into the business, so you're debiting the asset here, and cash is going out of the business, hence you're crediting it from the business here. So this is how you're generally going to identify a particular asset transaction in the books of accounts. So now that we are done with an asset transaction, let us have a look at how we are going to calculate a bank loan which is a liability in the business. Alright, so generally if it's a liability in the business, we just have to remember that liability is something that you're due to pay from the business. Alright, so bank loan is what you're availing from a bank. So bank loan is something that you're liable to pay on a future date. So what is a bank loan? Bank loan is a liability. So how are you going to record this particular transaction? Alright, so what you're going to do in the books of accounts, in the journal book, you're going to record the transaction in the following manner. You're going to take it as cash, which is first coming into the business. Alright, the logic is when you take a bank loan, you have to credit the liability when it is increasing, and you have to debit the asset when asset is increasing. So the logic here is asset and liability. Here it's unlike the furniture purchases, because in this particular transaction you have asset and liability playing an equal role in the transaction. Asset is getting increased in the business through cash, and bank loan as a liability is increasing in the business, and hence that is why liability will be credited in case of increase and asset will be debited in case of increase. Alright, so this is how you're going to pass the transaction. So we'll have a look. So what you're going to do, you're going to record the transaction as cash account debit, alright, to bank loan account. So you have a bank loan of how much? It clearly says rupees 10,000. So you're getting cash of rupees 10,000 into the business, alright, and you're going to credit bank loan of rupees 10,000 because this amount you will have to pay on a future date. When? Well, it doesn't state. It could be after 3 months, it could be after 6 months, it could even be after 1 year. So you're going to credit bank loan because that is the liability which is there in the business, which you will be paying on a future date. Alright, so in this particular transaction, cash as an asset is increasing, alright, which is why you're debiting this particular transaction, because cash is increasing in the business. And then you have bank loan, which is a liability in the business, which is being credited of rupees 10,000. So what is bank loan? Bank loan over here is a liability in the business. So hence what is happening in this particular transaction is asset is increasing and liability is also increasing in the business. So this transaction will also be reflected in the balance sheet with an increased cash balance and a specific item on the liability side known as bank loan account, which will be visible in the balance sheet, which is also called as the position statement of the business. Alright, so this is one way of identifying a liability transaction, how whether or not it's coming in or going out. It just says bank loan, which means to say you have availed a bank loan. If you're going to pay back this loan, then the transaction is completely different. I will not confuse you with that in this particular video. And then for the next question, you have additional capital of rupees 10,000 being introduced into the business. So you already have capital in the business and you're introducing additional capital for the business. Alright, so how are you going to record this particular transaction? Let's have a look. So what you're going to do is you have additional capital of rupees 10,000 which is coming into the business. So what you're going to do, capital by logic will be credited in case of increase. Alright, because capital is something that you're going to use in the business for production purposes. Capital is something that holds the business together. So when capital is increasing, you will credit it. Alright, but when capital is coming into the business, you also have to debit an asset. And what is that asset? It could either be bank account or cash account. It doesn't state what here. So we will assume it as cash account, which is increasing in the business of rupees 10,000, and that cash is of the business. So how is the transaction going to look like? Let's have a look. So what you're going to do is you're going to debit the cash account, all right, of rupees 10,000, and then you're going to credit capital account because you're introducing capital of rupees 10,000 in the business. So you're crediting capital of rupees 10,000 in the business. All right. So what is happening by logic here? Asset, which is cash as an asset, it's increasing by rupees 10,000 in the business, and capital by logic is the owner's funds, It is also the shareholders' funds in case of company. It's the owner's funds in case of a sole proprietor or a partnership firm. So capital is increasing in the business. You're reintroducing rupees 10,000 into the business. So capital is, as you know, the owner's funds which is coming into the business, and hence capital by logic has to be credited. So simple enough. We have understood 3 transactions so far. Let's go to the next one. Coming to the next item in this particular example, we have electricity bill paid of rupees 5,000. Electricity is an expense in the business, and all expenses are debited when they are increasing or when the payment has been made. And when you're making the payment of an expense, you generally credit an asset, which is either cash or bank. And in this particular example, I have assumed cash payment being made in this particular transaction. So let's have a look how the journal entry will look like in the journal book. Alright, so what you have here now is electricity bill being paid. So generally people tend to call it as expense account, but I would rather advise that you identify what the expense is and name that expense account respectively in the journal book, so that your ledger accounts are much more easier and your P&L account can reflect what the expense is in much more detail. In the further videos, we'll be looking at all of those items, not to panic at this moment. So let us just have a look at how this particular transaction is going to look like in the journal book. So electricity bill paid of rupees 5,000. So we are going to debit the transaction. So electricity, like I said, all expenses are debited. So let us just say electricity bill debit. And what is the amount? It clearly states as rupees 5,000. So we debit rupees 5,000 in the business. All right. And like I stated, I'm going to assume cash is being used to make the payment. So I'm going to credit to cash account rupees 5,000. All right. So using cash, I have made this particular expense payment. So the reason and the logic of identifying what electricity is or what any other expense is, if it says paid, it means to say the expense has already been made a payment of, or the expense is being cleared off from the books of accounts. So electricity bill which was due has been paid, and hence all expenses have to be debited in case of increase or if the payment has been made. And cash as an asset is declining in the business because you're using cash to make the payment of this particular expense. So cash as an asset has to be credited because it is declining in the business respectively. So let's move on to the next one. So for the last transaction, we have sales of rupees 30,000 which is taking place in the business. So sales is a revenue that's taking place for the business, meaning you have sold goods or you have provided services at a value of rupees 30,000 for which you have earned that revenue. And generally you earn a revenue in the form of cash or bank. So I'm going to assume in this particular business transaction that you have received cash of rupees 30,000 for a sale of rupees 30,000. All right. So how am I going to record this as a part of the journal book as the first initial entry for the sale which has occurred in the business? So this is how the transaction is going to look like. You are going to debit the cash which has been received. So cash account debit, and rupees 30,000 is coming into the business. And how did you receive this rupees 30,000? It is through a sale, which is a revenue. So you're going to credit to sales. All right. And the value is going to be rupees 30,000. Now the logic of this particular transaction is cash as an asset is increasing in the business. And you all know that any asset that is increasing in the business has to be debited. And sales is a revenue in the business. And the logic of accounting is any revenue in the business, when it is increasing, it has to be credited. So sales as a revenue is being credited, for which you're reflecting a particular transaction in cash of rupees 30,000 being increased. So something that you can observe when you look at all of these examples: furniture as an asset, bank as a liability, additional capital as capital, electricity bill as expense, and sales as revenue. These are just simple examples that I've used to highlight to all of you, the viewers, as to identifying what the transaction is, and whether it's an asset, whether it's a revenue, and in case of capital, if it is capital, and what other account is being affected, and if it is a bank loan, is it a liability, and if it is furniture purchase, is it through cash or is it through credit? So you will have so many questions running in your head when you look at these transactions for the first time. And the simplest way of identifying these transactions and what they are is understand what is coming into the business and understand what is going out of the business. If you can identify whether you're receiving money or you're making the payment, or whether you're receiving something or you're giving something, you will know based on the logic of that whether it is any of the 5 important items, which is asset, liability, capital, expense, or revenue. It's going to take a lot of effort to do this, but I hope this particular video is going to give you some idea as to identifying what the transaction is and what happens when you generally record a transaction, and how do you record the transaction by identifying on the basis of what the item specifically is. Alright, so this was just a small video to give you an idea of how to identify a journal entry transaction and how to pass that entry into the journal book. Alright, that concludes this video for identifying a journal entry transaction on the basis of asset, liability, capital, expense, or revenue. If you enjoyed this particular video, do hit the like button, do share it with whomever you know, and do subscribe to my channel if you haven't yet. Thank you so much. See you guys in the next video.